Good morning. I'm Pete Najarian. This is The Take. I apologize for missing you last Friday. I was up northern Minnesota and just did not have the signal to be able to do such a thing. But we are back. And you look back to Friday and you can see a market that it established itself early, and then we just churned the entire day, and we actually established a down move. We were down about 160 points on the Dow. It did move a little bit here and there, but for the most part, just churned and stayed there for the remainder of the day. Same thing with the NASDAQ. NASDAQ down about 130, 140 points. It churned as well. It dropped as well very early, and then it just went through the churning process. The volatility index is, I think, the thing that stood out the very most on Friday. And the reason I say that is we did get over 20, but we actually closed over 20. Matter of fact, closed just underneath 21. And a pretty interesting day. We actually hit as high as 21 and a half on the volatility index. And when you consider the fact of where we were on the Dow and the NASDAQ, we'd seen much harsher days. And yet, for whatever reason, at the end of the day, we actually did hold on to those 20s. And that's going into the weekend as well. So a lot of different things going on that were definitely interesting and definitely unusual on Friday. I'll tell you one thing that was really incredibly, not unusual, but incredibly strong. Volume. When we look at the volumes, we talk about volatility, velocity, and volume a lot. And volumes, we traded just over 47.5 million contracts in the options world on Friday. Gives you a little bit of an idea when we talk about growth and we talk about where is it in the marketplace, that is where the growth is. And we talk about this each and every day just to point that out so that you have an understanding of the derivatives markets just a little bit more and how much that really has taken over since, call it 2007. It's always been in this process, but since the financial crisis and a lot of risk was taken out of the marketplace, you can find yourself in the derivatives markets, and that's when we really started to see a major spike. Crude, somewhere near that 72 level on Friday. The only sector that traded in the green and stayed in the green on the day, I should say stayed and closed in the green on the day, healthcare, and had a really, really interesting day because we did see pressure across just about everything else. Materials were down close to 2%. Technology was down 1.5%. A look over at industrials, they were down about 1%. Energy down about 0.75%. Financials are down about 0.5%. So there was a lot of pressure in other areas of the market, but the healthcare was the one area that did stand out for us. So Thermo Fisher, that was up about 6.5%. Zoom, up about 3.5%. Nucor, not up, actually down. You look at Nucor and Freeport, and you're looking at down 3.5%, 4.5%. We were starting to see those materials really take it on the chin. We got a little bit of lift in the casinos, but not really. I mean, the honest to God, this has been an area that has been pressured and pressured and pressured to the downside, and a lot of that having to do with that Macau exposure, of course. Apple, Microsoft, Cisco, a lot of old tech, just down just enough to be able to pull down onto that technology as well. So you wake up, if you're up really, really early, the markets were down a little bit, but then they started to absolutely just crater about this Evergrande and the debt crisis and the default risks and all the different things that are being thrown around today. And that market, all of a sudden, before you could even blink, we were down almost 700 points on the Dow. We were down almost 300 points on the NASDAQ. We get to the opening and we do what we oftentimes do, a little bit different numbers when we get to the opening, down about 500 on the Dow, down about 230 on the NASDAQ. And we started to show some nice improvement towards the top of the hour, first 30 minutes of the day. We were only down about 360. I say only because we cut in half what we were in the pre-market, down about 240 on the NASDAQ. And then the slip started again. And just before I came on, the last I looked, we were down about 500 points again near the lows of the day. And we were looking at about a 300-point down move on the NASDAQ. So, of course, volatility is spiking. We not only closed above 20, but now we hit 26s. We've been 24s, 25s. Seems like 25s is where we are, at least in this first hour, especially with this return to the downside that we are seeing. Sectors that are getting hit starts right there with energy. Energy down nearly 3%. You got financials down over 2%. You've got materials down about 2%. Consumer discretion close to 2%. Technology down about 1.5, maybe 1.75%. That all just tells you a little bit about how broad this is today and the push across all of these in a pretty substantial way when we're talking about so many different sectors down close to 2% or even more than 2%. Bitcoin, that was down over 10%. Last I looked, it was down about 8%, but call it somewhere just north of 43,000. And we've been talking and tracking this for a while now because after that big push to the downside, Bitcoin had this nice, steady, methodical move to the upside, then a couple of jumps, and we were over 50,000. We gave that up, and now we're significantly well below that area as well. So crude hanging right around 70, 71. So nothing major there, no major concerns as far as the price of crude because we were just up at 72. Here we are, let's call it something close to 71. But a lot of standouts right now when I'm talking about crude. When I take a look at the beta names, that's where they are getting hammered. We talked about energy being down about 3%. Well, these beta names are down significantly more. That's why they are the beta names. They are moving with a much bigger beta than the rest of the market. So Occidental, Apache, look at Diamondback, look at Devon, all these names. We're talking about down anywhere from 5 to 6% or maybe more. Nucor was early down about 7%. Freeport-McMoRan down about 5%. You get the idea. Materials and obviously in the energy space, especially these next level energy names, really getting hammered today. Chinese names, again, getting caught up in the whole thing, obviously, but you've got PDD, you've got Baidu, you've got JD, all those names down anywhere, call it between 3.5% and maybe 5%. So a nice solid push to the downside. And again, very, very broad based in terms of what we are seeing. So I got two unusuals. I'll be on the halftime show today. Look forward to seeing you then. And right after the halftime show, we've got Cash Flow Portfolio right here again at Market Rebellion. So what do we have for unusual early on? Well, the two that really stood out. So the issues that we are looking at, and a lot of what obviously is moving the markets today to the downside is the source of China. Well, that's pretty interesting because we are seeing some buying in the EEM calls. Now, that I just find that incredibly interesting, but this is also on this move to the downside, and we all know that Chinese names do take up a decent portion of the EEM. So emerging markets ETF trading right around 50.33. We had a buyer of 8,000, October 52.5 calls going for about 32 cents. Interesting to see that they're actually also selling the downside put. They're actually selling a different month. They're selling October 8th, same price as what they are paying for these upside calls. So this makes for a very interesting trade because somebody out there is saying, you know what, I'm willing to own it at this level, but I think we're going to go up to the upside and then now a very inexpensive option. And let's be honest, the pullback we've seen, whether it's in the FXI or the EEM, the pullback from the recent surge to the upside has been fairly dramatic, and we're still seeing that obviously today. Gilead's the one that really looked interesting to me as well. And why did that look so interesting? Stock trading just beneath 72, and they're going all the way out. Now, we have seen nothing but short-term paper for the most part. Obviously, there are a few here and there that go a little bit further out. These Gilead calls go all the way out to June. The June 75 calls, stock trading 71.88. We had a buyer of 7,400 of these calls. The premium levels, 440 up to about 490. Your premium that you're looking at there on a low volatility stock is all based upon time, or not all, but the majority of it based upon time because they are going out in time. They're buying all the way around and getting out till June. So that one definitely stood out to me as well. Expensive, yes, those options. And the reason they're expensive is because of all that time premium for the most part. Obviously, there's some volatility. There's also the rest of the Greeks that go along with the pricing models. But interesting to see somebody going all the way out into June when we are mostly seeing weeklies or monthly options trading each and every day. Folks, have a great day of trading. I'll see you on the halftime report or cash flow portfolio. Either way, derivatives are on fire. We see the explosive volumes each and every day. This is the place to be. We've got the educators. Always be cognizant of that and read books, read anything you can find so that you can have a little bit better understanding of the derivatives markets. Have a great day of trading.